Hello. In this video, we'll look at bank reconciliations and what steps accountants take to reconcile the business's bank accounts. Once a month, the bank sends a statement of the deposits received, checks paid, and electronic transactions for each account. The bank statement shows the name of the bank and the name and address of the account holder, the account number, and the month the statement is for. In addition, the bank statement shows the beginning balance, a summary of all deposits, a summary of all withdrawals, and the ending balance. And below that summary of the balances and activity is a day-to-day activity and balance listing. Most companies will check their account activity daily to see the incoming and outgoing electronic payments. Why? It's important to post activity timely. Some customers might prepay an order, and the invoice and shipment of goods can't be completed until the money is received from the customer and posted. It wouldn't be good if the company waited until the bank statement is received. Why does the company need a bank statement if all information is available online? It's the official statement that confirms the company's bank balance. Auditors will specifically request bank confirmations from the bank and will want to see the bank statement and reconciliation for the interim and year-end audits. When the bank statement is received, it is reconciled with the financial records of the business to ensure that 1, our general ledger includes all transactions, and B, the transactions listed on the bank statement are accurate. So on February 5th, Max Out Sporting Goods received a bank statement for January 2021. The ending cash balance according to the bank is $24,508.50. On January 31st, the cash account called the book balance of cash is $16,060.70. So why is the bank and book balance not the same amount? Well, sometimes the difference between the bank balance and the book balance is due to errors. The bank might make an arithmetic error, give credit to the wrong depositor, or charge a check against the wrong account. Other than errors, there are really 4 reasons why the book balance of cash may not agree with the balance on the bank statement. There's outstanding checks that have been issued and recorded in the company's general journal, but have not yet been cashed by the bank. For example, the company issues 5 checks on the last day of the month, but the checks aren't cashed until the following week. There's also deposits in transit, deposits that have been recorded in the company's general journal, but are not reflected on the bank statement. For instance, a deposit is made on the last day of the month, but the bank doesn't post it until the next day. So also service charges and other deductions, deposits that are on the bank statement but not yet recorded in the business records. For example, an electronic deposit was posted by the bank, but the company has not yet recorded it. When we look at the bank reconciliation here on this page, we can see at the very top the name of the business and underneath the title, Bank Reconciliation Statement, and the time period on the 3rd line. There are 2 main sections in the bank reconciliation. In the first section, we list the bank balance of $24,508.50 and add deposits in transit of $5,940. And any amount the bank owes us because the bank made a mistake of $1,600. Then we subtract any outstanding checks, meaning we issued the checks, but the bank hasn't cashed them yet. Here we see outstanding checks of $15,537.80. When we add the deposits in transit, the amount the bank owes us, and subtract the outstanding checks, we arrive at the adjusted bank balance of $16,510.70. In the second section of the bank reconciliation, we start with the balance per our books of $16,060.70. We then add any transactions that have not yet been recorded but were on our bank statement, and we subtract any charges that have not yet been recorded but also were on our bank statement. The result is our adjusted book balance. The adjusted book balance and the adjusted bank balance should be the same amount. Like we just saw in our example, sometimes we find that there are transactions on our bank statement that we have not yet recorded in our books. Transactions that appear on the bank statement but have not yet been recorded in the general ledger must be first recorded in the general journal and subsequently posted to the general ledger. So for Max Out Sporting Goods, we need to make 3 entries. First, we need to record the NSF check from a customer for $525, which was charged back to the bank account. Basically, the deposit was reversed. And the bank also assessed a fee for $25. To record that transaction, we would debit accounts receivable for David Newhouse for $525 and debit bank fees expense for $25 and credit cash for $550. In addition, we received a loan from First Texas National Bank for $1,000, which hasn't been recorded. We debit cash for $1,000 and credit notes payable.